Hello guys, it's Max here from Daily Market Movements, and just before I start this daily analysis of the crude oil market for Tuesday the 19th of May 2020, I just want to make you all aware of a trading signal service that we provide here. If you would like to receive trading signals from either myself or the rest of the team here at Daily Market Movements, then you can do so simply by visiting our website www.dailymarketmovements.com. The website link is below this video in the description. Once on our website, you'll see that we charge a very small fee of $199 for a year's membership. So in front of me is the crude oil futures chart, and as you can see, we have surged. It's been a really good past week for the crude oil prices. We have had a couple crucial developments in this market. We've broken above the 50-day EMA, and more importantly, we have broken above the $30 a barrel price, which was a significant and huge psychological number for crude oil to break above, and it looks like we will get the daily close above there. So it's very simple. This now tells me that this market is going to close a gap at $42. As you can see, we had a gap there. It still needs to be closed, but it makes perfect sense as well, because we have the 200-day EMA, which aligns perfectly with closing the gap. So now I think we go and challenge the 200-day EMA. The demand for oil has uplifted in the last couple of weeks as the US economy has reopened. The most crucial thing for the crude oil now is whether there is a spike in cases. I know that Texas, they reopened certain parts of their state and they were seeing a spike in cases of coronavirus. This is not good news. If any other cases follow, this could lead to less demand in oil if the states have to then be closed once again. So do keep an eye on that from a fundamental perspective. Personally, I am sticking away from oil at the moment. I just don't think it really makes sense. From a technical perspective, as I mentioned before, it makes sense we go to $42 now to close the gap. But still, from a fundamental perspective, I still believe that we should be trading below the 50-day EMA, as there's just no demand for oil still. There are states reopening, but there's nowhere near the same amount of demand that there was prior to this pandemic. I just think, there's nowhere to store this oil as well. It's still getting pumped out of the ground. So I just prefer to stick away. In terms of the RSI, we are at 60, so we're not quite at the overbought status yet. However, we are approaching, so do be wary of the RSI, but we still do have plenty of territory to the upside, which could bring us into contact with a 200-day EMA. But equally, we have plenty of territory to move to a downside, which could break us below the 50-day EMA and more. Also, be wary that the June contracts are expiring in a couple of days' time, and a lot of traders are expecting some bearish volatility when that does happen. So do be wary of that.